Hello, everyone. Thank you for joining me once again on the Women Series program where we capture developments and stories that impact women. Thank you for the feedback I got from the last episode. I found out that everyone loved the affirmations and manifestations. It's a good way to start the year and it's a good thing to emulate over time. And when you do this, it becomes part of you. Now, this is our first episode where we're having a guest for the year. And I'm quite excited, right? And I love the conversation that we're going to be having today. But before then, let's quickly go on a short break and we'll be back.
Tune in to WebTV Daily to stay up to date and informed on the financial market, personal finance, and more. We have got you covered with all your favorite TV shows, economy and politics, market review, women's series, Millennial Talk, Islamic Finance Weekly, The Brief, exclusive interviews, events, and we keep you up to date on all the updates in the financial market with the market opening gong. Watch premium content. Watch WebTV. Same news, different perspective.
Welcome back. If you're just joining us, this is the Women Series program where we capture developments and stories that impact women. This is January. And in January, a lot of times we talk about wealth creation, savings, investments, and all the likes, anything that has to do with money and how to plan ourselves, how to plan our finances over the year. And I think throughout last year, we spoke so much about savings and having emergency funds. We're moving a little bit further from that, and today we're speaking about investments. And why we're doing this is because over time, in the last 2-3 years, we've learned that there's a trend, there is a change in the way in which we're generating wealth and making wealth, basically. And we've seen emergence of cryptocurrencies. We've seen so much talks around stocks, bonds, and all the likes about how you can generate wealth through investments. And that's like a way for you to go about it. And on this episode, we're speaking about investments, but in relation to cryptocurrencies. And I have two amazing guests with me to do that with me today. Our first guest is Olubunmi Fabanwo. Olubunmi Fabanwo is a blockchain enthusiast and the founder of Banks and Blockchain. And my second guest is Jariat Bakare. Hello, guys. How are you doing?
Very well, thank you.
Good to have you.
Pleasure.
Happy New Year. Is it too late to say Happy New Year?
No,
Or is this
it's
too
not too
early?
late.
Jariat, how are you? How are you doing? How's work going?
Doing well.
Are you still in the euphoria of festivities or you've gotten over all of those?
No, I've gotten over it.
And we're ready to work.
Yes.
How about you? Are you ready to work? Rock and roll.
January 1st.
We're ready to make all the monies we can make in the year
Yeah.
2022.
Absolutely.
And I love the feel that I'm getting this year. Like, it's so calm, so cool. Everybody's making peace with themselves. No so much stress. Everyone's just all about peace and living well. And speaking about living well, you can only do that when you have your finances in check, or one of those things is having your finances in check. And we spoke so much about investments, we spoke so much about savings last year and having emergency funds, and that's because of having moved out of the COVID era, post-COVID era, and it went well. So many people did that, and I think they got their rewards after so much savings and whatnot. But today, we want to talk about investments. And here's why I want to do that. The last 2-3 years have taught us that there's a new shift in generating wealth when it comes to trading, investments, stocks, indices, forex, commodities like oils and precious metals, including golds and silvers. Now, these are terms until recently that were so much aliens and it just didn't make sense to anybody, but now we're embracing it gradually. And one of the things that made like so much gained traction last year and last 2-3 years was cryptocurrency, the emergence of cryptocurrency. Now, we're going to be speaking about that. But before that, Bumi, what are the myths around cryptocurrencies? I think we should start on that because there's been so much talks about it. Some people still feel like it's not safe. Some people have their doubts. Some people don't like it and whatnot. But what are the myths around it? Let's start with that first.
Okay, I think that the first one, thank you very much for having me.
You're welcome.
It's a pleasure to be here. I think the first and most popular myth around cryptocurrency is that it's used for illicit activities. And of course, all over the world, very prominent people have spoken against it. And they've said that, oh yes, they use cryptocurrency to hide funds, to launder money, to traffic women, to do child trafficking, prostitution, and a lot of things like that. That's one myth. I'm sure you don't want me to bust the myth yet.
No, just keep going, yeah.
Okay. And the other myth is that it's going to be no more. That it's just a farce. That it's just a passing phenomenon. That's another myth. I think those are the two basic myths that we have, and I'm not going to bust the myth, so let's just leave it like that.
Okay, yeah, I think that's like a safe way to start. But before we go in, we're speaking so much about investment, but before we go so much neck deep into the conversation, at what point would you even advise people to start investing? Because we talk so much about investments, and the money we even have a lot of times is not even enough for us to have like a regular 3 square meal. And now we're talking about investment. So at what point do we advise people to go into investment?
Yeah, so the smartest way to ask people to do that is after they have savings. I mean, you have to have savings, or what Nigerians call vex money. Before you can say, oh yes, I want to invest a portion of my funds in anything. So I think that savings is the first place, because we are not immortal. You can fall sick. Anything can just happen. There might be emergencies and all of that. So you do not really want to take money from your investment. So it's rather do savings. So have a lot of savings. Then when you've grown your savings to a certain level, to a satisfactory level, then you can start speaking about investments. Yeah.
That's very good. Jariat, you study the market so much and you know a lot about the markets. In the last 2 months, what has been your findings? What have you discovered around cryptocurrencies?
Last 2 months? Okay, that was last year. And last year has been a mixed year for cryptocurrencies because we saw different regulations which was stemming from the politics, religions, elite, and even personal behaviors in the market. Okay, I'll just give a retrospect to 2020. That was when the market gained prominence. People started going into the market. And the reason why people went into the market was as a result of the national lockdown, where people had the time to trade. And people started thinking, okay, wow, having this money in my bank account is not yielding anything. It's just there. And at the long run, it might not meet my needs. Because me put my money in the bank, I could actually have a intention, okay, this particular money, I want to buy a Benz. So by the time this thing, okay, next year, I'll get a Benz. But when you get the money by that time, the money won't be able to purchase your Benz because the value has reduced. The time value of money is one of the indicators one should look out for. And at that time, the market, why I said it was a mixed year, the CBN, which was in February, sent a circular to all commercial banks to restrict the account of crypto holders, to restrict the account of users dealing with cryptocurrencies. And that was a shock to everyone because no one had the primary information about that. Then people were scared, what is going on? Then we started seeing uncertainty, and the market is scared of that. We don't know what is going on. People are scared. Whoa, let me withdraw my money. This is because people invested billions into it, and when billions come down, it could affect you. Like, oh, I don't want this to do it. People are trying to find out ways to offset their money for cash. And some exchanges that has P2P, which was peer-to-peer transactions. People, wow, this is an opportunity because it is not traceable. Because the crypto itself is decentralized. So people started moving on to the P2P, start transacting. I give you cash, you give me Bitcoin. You give me cryptocurrency, I give you cash. And at that point, the central banks know, wow, this is what is going on. Then even that, statistics shows that Nigeria falls into the 6th position of cryptocurrency, of the top 20 global cryptocurrency in the world. Look at it. sixth position, not really significant.
Yeah.
So last year was a year like, okay, people went into cryptocurrency. We saw companies going into it. Goldman Sachs even ranked cryptocurrency as the currency that gave it, as the investment that gave it its highest return last year.
Yeah, I love that. But there's been so much, what's it called, concerns with respect to the safety and volatility of the markets. Could you speak to that, Olubunmi?
Okay, so it's supposed to be volatile
Why should it be volatile?
because unlike fiat currency, that's the money that we know, it's not controlled by any central entity. Cryptocurrency itself is decentralized. So it's when people buy, the price probably go up, and when people sell, prices go down. So it's just based on the law of demand and supply, like any kind of good or service that you're trying to purchase. So by the time everybody's trying to buy it, prices are soaring because everybody knows. So an example, I am there, you want to buy maybe 1 Bitcoin from me, and I see that Jariat is trying to buy. This person is trying to buy. Let me increase the price so that I can make spread. And that's how, but by the time nobody wants to buy, I'm begging you that, oh yeah, now please, just purchase. Then the prices, I reduce the price. So it's just based on the law of demand and supply, hence the volatility.
So does that speak to why we're having so much dip in the markets as of right now?
Oh yes, absolutely. If you see, there's been a lot of institutional buyings. I think Binance holds the highest amount of Bitcoin now because they really went into the market to buy. So the dip is a very good time for you to purchase, so that by the time it increases in value, you're able to sell.
How then does it make, how does this make cryptocurrency a good investment?
Okay, I've not said cryptocurrency is a good investment, but
okay, no, you're making it sound like it's a good one.
I think I'm just giving a background and an understanding. Okay. And maybe I should just go to the beginning of this whole thing. Yeah, so in 2008 there was this financial crisis, the Lehman Brothers, and banks were going away. Banks were going down the drain. Then central banks had to start bailing banks out. So a lot of people that had savings then in the banks, they lost their money. And the government now used taxes of the same set of people. Just imagine I'm losing my money in the first place to banks that have gone into investments, illicit or maybe investments that are not proper. They lose the money, probably real estate.
Yeah.
Then you are using my own money, my own taxes again, after a sweat, to bail out those same banks, those big banks, too big to lose. Then a set of people, a certain person, Satoshi Nakamoto, came and said, but really, why should a central bank determine the value of my money? Money is beginning to change, so why should anybody be telling me that, oh, my $1 is worth 500 naira or anything like that? So come on, let's write a code that will make money decentralized, not that one central entity like central bank is controlling money. The birth of Bitcoin, very easy. So with Bitcoin, you're able to, I don't need the middleman, which is the bank. I don't need anybody to be able to transact. Because if I sit down with you and we have a negotiation, was the bank there? So why should I go to the bank and say, hey, bank, let me transfer money to Ayomide? Why can't I just transfer value to you? Then we skip all those fees. Because the banks are probably just sitting down and enjoying the fees because they are keeping my money for me. But no, don't worry. I'll keep my money myself.
I got my back myself.
Exactly. I got my value and I'm going to exchange it for whatever I see fit. So if you look at that kind of background, you see that it makes a lot of sense. And it shows that it is futuristic. And so that's why volatility doesn't really, it doesn't matter.
Counts, really?
Yes. You know that value is always going to increase. That's the good thing about it. The value is always supposed to increase. Now, January 1st, 2020, 2021, Bitcoin was at about maybe $25,000 to 1 Bitcoin. Then January 1st, 2022, Bitcoin was about 44,000. I'm sure that when we sit down here, by God's grace, in 2023, we are going to be speaking about an increase. However, during the year, we had dips, we had ups, we had downs, but did it come out great after a year? Yes.
Yeah, it did.
So that's why in the long term, you have to tell people that, oh, if you do not want to have very, very in-depth understanding of this, just see it as a long-term investment. Just say that, okay, I'm throwing my money, I'm throwing this money away, I want to invest in Bitcoin, I want to buy Ethereum. Let me just put it away. Let me forget about it and come back to it in a few years or in a few months. You find out that you made the right choice. Well, most of the time, this is not an investment advice, but really, if we are being honest, that is how people should really look at it. Except you want to really sit down and have very, very deep understanding and say you want to be trading, you want to be making money like traders do. So you put in $10. When the market is high, you quickly sell, you make $12, you bring that $12, you take the $2 off, put back the $10 again, you just trade back and forth. So yeah, I think I've provided some.
So
some
if you're saying that I understand that you want to be in the middle. You don't want to say if it's good or if it's bad.
Yeah.
But then again, does it make it safe?
Well, I think safety is relative. So
How?
safety to you is not safety to me. I think that, like I said before,
I don't want to lose my money.
yeah,
Nobody wants to lose their money.
Of course.
Exactly. We all want our money to
Yeah.
yield interest, right? So how does it make it safe?
number one, don't be greedy. Because a lot of the times, people lose their money because they're greedy. A lot of people. Go and check it. My friend just made 50% on his $100. I want to make the same thing. So you just jump into it. And this kind of thing is very easy. You just see that the market just goes down and you've lost all your money. So don't be greedy. And see it as something that you want to invest in long term. I don't know if I'm speaking your mind, but yeah, really. It's let me be truthful. It's a good investment because it is futuristic. It is
Finally, it's the nail on the
yes,
head.
it is futuristic. However, like every other investment, there's no definitive way to say, oh yeah, I'm sure you will not lose your money. You have to tread carefully and you have to be smart about it. Easy investment rules, the higher the risk, the higher the returns. So if you know that you want to put your money in cryptocurrency, which is quite risky, then you know that there is every possibility to lose your money. But then if you are seeing it as an investment, a long-term investment, and I'm putting maybe a certain percentage, you have to be smart about it. If you're investing, put a certain percentage of your money in something like cryptocurrency, then you do other things, do bonds, which I'm sure we'll still speak about, do stock, do ETFs. There are crypto ETFs that are safer. So for people that are risk averse, you can just sectionalize your
money. Just spread it across board.
Exactly. So that even when cryptocurrency is misbehaving, you are still enjoying
the benefits from other sides. No, that's fine. So he has said that he has finally affirmed that it's a good investment, right? And what are your thoughts on that regarding the clampdown that we're currently going through in Nigeria with regards to performance of cryptocurrency in Nigeria?
Yeah, this clampdown did not affect cryptocurrency because we saw high rates of P2P. People are going down to P2P, transacting with P2P. And you know this market is not controlled by CBN, by any central authority. Yeah. It's not controlled. You have the power. You have the power to control your funds.
Yourself.
And it depends on you how you want to influence your earning. If you're this kind of person that likes taking risk, you can put more of it and wait. Okay, yes, I'm putting something there. I'm gonna earn this. But this kind of person you're scared, then you start panicking. Oh, this is good. You're gonna be done. So the last year was not any significant. Even the clampdown did not affect it. And other countries, let me bring back countries like USA. USA did not ban this. They didn't place any outright ban. Rather, they saw the cryptocurrency as a monetary service through the FinCEN and also as a taxable property through the Internal Revenue Service. And also countries like South Korea. Recently, South Korea just imposed 25% tax on crypto zona through that game. And this is a method whereby the monetary authorities can generate fund from. This is so easy. It's just logical. You just go directly to the exchange. You know these people are making billions from it. As they're making billions, just tax them 25% of your gain. Pay it to us. You don't have to start worrying and say you want to put a clampdown. That clampdown is not the best solution because you don't have any right on it. Rather, you will inculcate nefarious acts. People will start finding ways to manipulate it.
That's true. So now we've spoken so much about how interesting this thing can be when it comes to investments and then getting your returns and learning about the market and understanding what the market is all about, right? Now, with regards to, I love to talk about women, especially grassroots women, and here's why. These people basically have their money. A lot of times they even have money more than people let sometimes. Yeah, exactly. But all they're after is they're used to the traditional way of saving money, keeping their money, and they don't want anything to dabble into. So for people like that, how do we now start bringing on, making them understand that there's an evolution with regards to money, there's an evolution with regards to investments and savings, there's an evolution to which you can even increase your money, because all these people just want to do is just take care of their children, take care of their children and send their children to school and eat. That's what they're all about. So for women that found themselves in this position, or women that are not even savvy, technological savvy, and they want to learn about these things, how can we start educating them that, okay, this is the way to go? How about it?
Yeah, so you've spoken about education. I think that's the first thing, education, enlightenment. And we have to come down to their level. You have to understand that these people don't want to lose their money. However, they might want to say, oh, I want my money to gain a little bit. Because I remember when I was in the commercial bank, those people, they'll come to you and say, I did not receive the interest on my savings. Now people say savings account. And I'm like, savings account, once you withdraw more than 3 times, you forfeited your interest. You know, they didn't have this information. They didn't know. They thought that since it's savings account, even if I leave my money there and I take some money out,
there's still some level of interest. And
you know that in Nigeria, people use savings to spend and they keep money in current. It's very, very funny. Whereas your current account should be where you should be spending from. It's checking account, and your savings should actually be savings. There's a reason why it was term savings. So I think trying to educate people like that is very, I mean, they saw it live and they were like, I did not know. I'll leave my money for 30 days, then I will not touch it. I will withdraw only 3 times the money I need. Very easy enlightenment. Then you go ahead and tell them that, oh, with this, your savings, you can still make more money on it if you put it in bonds or if you put it in treasury bills, for example. And they will say, give me treasury bills. Okay, treasury bill will give you maybe 10% of this money. And that's more, and it's safer. Except Nigeria dissolved and everybody says we are going our separate ways, that's when you can lose your money. So it is very, very safe investment. And you can take it up the notch and say, okay, you can make 30% on this money, but it's going to be more risky than your savings and the treasury bills or your bond. So I think that it's just, it has to do with gradual education and also the willingness of people. If I'm not willing to, some people are just like, I'm not, leave my money. Even if it's losing, leave it. Inflation, don't worry. I'm fine. Just leave it. But then, if you really want to make more out of your money, let your money work for you. Apart from having a business that is running properly, you can always educate people and tell them, oh, come and do stocks, come and buy bonds. Then before you move up the notch to something like cryptocurrency that, in your words, is volatile.
Yeah, it is. It is. But there's been so much conversation around talks around NFTs as of recently, and that seems to be gaining so much traction. Could you speak to a little about that? It's
gaining traction because people are making generational wealth from it, and that's what I say about understanding things.
By the way, tell them the full meaning of NFT.
Non-fungible token.
Yep.
Yes, so anything that
and why is it not fungible token?
Yeah, so anything that is fungible is something that you can exchange for cash.
Okay.
That is exchangeable. But this one is not fungible because only me, I'm the only one that has access to it. I'm the only one that has authority to it. So a token, the non-fungible token is like a certificate of ownership. So for example, they take a picture of you and I say, oh, I like this photo and I would like to have I want to be the one to have access to it. Only me. I want it logged down in my name and say, oh, Bumi owns this particular picture that was taken on this particular date. I get a token for it. I get an NFT that says, oh, anybody that is Bumi. It's because I see that in the future, maybe Ayomide has already blown so much and they want to refer to...
That's interesting.
And they want to refer to our beginning days or our middle. And they say that, can we have pictures? And I say, hello, I have a picture of...
That's how you just blown like that.
I have a picture of this person when she was in so place. So you have to pay me $1 million to be able to get it. And because they know the value of what they are trying to get, they will pay me.
The people now start bidding for it again.
That's just it. It's digital assets. You're investing in digital assets. And that's why a lot of people, I think there was one NFT that was sold for maybe $69 million. Jack Dorsey sold the first tweet. He took a screenshot of his first tweet ever on Twitter. He's the former CEO and he sold it for maybe about $6 million. And someone bought it because maybe in 10 or 20 years, when Twitter has become a multi-trillion-dollar company, they will say, oh, please, where is the first tweet ever? Hello, I have the first tweet ever.
Interesting.
Yeah, so, and it's recorded on the blockchain. So even if you can have a picture, you can have that picture, that's Ayomide's picture, but then it is not recorded that you have access to it. So if you want to sell it, you're unable to, people will ask you, where is it recorded on the blockchain that you own this picture and you don't have it? I am the one that has the private key to it. I say, oh yeah, come. I have authority to own this. I have the certificate of ownership. See my NFT number. This is the wallet address, blah, blah, blah. That's just what NFTs are.
And like that, I can make money. I can be like the next down with it.
Yeah, so now you find out that this year that Nigerian musicians are going to release their albums as NFTs.
Wow.
Yes, so it will only be a set of people. They will just bid it and say, oh yeah, you can download my album on so place. So it's only when you make a certain amount of payments that you can download the album. And even if you transfer the file to another person, the quality or the person may not even be able to play because the person will need private key to be able to access the album, which only you have. Then by the time they make a lot of money from that, they can now release it to the general public.
I'm enjoying this conversation and I'm getting so much lost track of time. I'm losing track of time. So let's quickly wrap up this last question. We've spoken so much about cryptocurrency as a means to investment. Are there other ways people can invest, women can invest?
Oh, yes. So I would say that treasury bill, like I mentioned, that is like one of the safest ways to invest, the most traditional one.
Yeah.
Bonds, savings bonds, several types of bonds, federal government bonds, and all. Then stock too. I mean, you can buy stock of companies. For example, you find out that there has been a paradigm shift, like you mentioned, over the last few years, and the pandemic has already accelerated that. So you see that tech companies are now even more valuable than before. So you can invest. Imagine people that are invested in Facebook maybe like 10 years ago or 12 years ago.
They're reaping the benefits
Exactly.
now.
So you can decide to look at companies that are coming like Zoom or teleconferencing companies that are really, really springing up now. Put your money in them. Just make a bet and say, oh yeah, in the next 5 years, I hope that this is this. So stock. There are also ETFs, exchange traded funds. Those ones are safer. They are safer than just buying into a company. So this one is like a group of people just bring different stock, like Apple, buy Facebook, buy everything so everything is just in a pool. Then they start saying, oh yes, the average of all this is maybe 5%, then they give 5%, whereas maybe Apple is doing like 30%. But then it's safer. You cannot lose your money to a certain extent. So you can do ETFs. Let me start from the beginning. Treasury bills, bonds, stocks. ETFs.
Thank you very much for coming on the program. It was great speaking with both of you. I mean, if I did not learn anything, at least I understand now. I have like a clear understanding of what crypto is, if it is safe or if it is not. Then I can now make my own decision if I want to do it or not. But most importantly, I enjoyed the conversation around the NFTs. That's the one I'm holding on to. Any other one, I mean, the fact that in the next how many years I can be like future Dangote, that's like very interesting. Thank you very much for coming, Jariat. It was great speaking with you. I hope you've learned one or two things from today's conversation. We've spoken so much about investment plans and investment opportunities. Now, one thing I really want you to take out of this conversation is be sure you have a good understanding of what you're using your money or what you're putting your money into. Get adequate knowledge, be informed, do not be greedy, and be patient. Be patient with whatever it is you're doing. And you might just be like the next Dangote, just as I am aiming to be. And until next week, thank you for watching. If you've got questions or comments, kindly reach out to me at Ayomide at Proshare.com. Do follow us on all our social media platforms showing on the screen. If you want to learn more about your personal finance, visit our website at www.proshare.com. More of our videos /WebTV. And until next time, thank you for watching.